And my name is Ryan. Welcome to the channel. Now, Glenn is out of town, right? He's in Hawaii. We saw some of the shorts. I wish I was in Hawaii as well. But I will be taking over the reins of the channel this week. So, welcome. And I have a special guest today. Todd Schaefer will be joining us here shortly, sharing with him some of the insights and, really some of the support that you get when you sign up for the VectorVest 7 software. Now, let's go ahead and talk about the homepage, right? I know I was off Thursday and Friday. I was looking at the market this morning. I see the rollover in the market there. Not much optimism leading up to Nvidia's earnings, right? Nvidia's earnings coming out Wednesday. So that's what the market's really anticipating right now. We're seeing the hesitation in the market as we lead up to that. So we'll give everyone just a moment to make their way into the room. We see the alert just hit here. It looks like everyone is making their way in. Now, I just want to make sure everyone can hear me. Everyone can see me. We got Joey in the background as well helping out today. All right. Let's see here. Yes, big week, Pennywise. Big week. Everyone has been waiting for Nvidia's earnings. I mean, SMCI, that was really the play leading up to Nvidia's earnings. We've seen, the retracement or the pullback in that stock over the last few days here. Palantir, another big one. That's going to be on the news today. So let's just talk about it. Obviously, we're going to talk about stocks today. But I just want you, to be very upfront with you. Look at what the homepage of the VectorVest 7 software says. Do not buy, right? VectorVest says clear as day. We do not advocate buying any stocks at this time. Now, if you've been loading up on stocks over the last week or two, it's been, if I scroll down, there's been some optimism there, yellow, a little bit of green. There's the one green light there on February 18th. But if I scroll down here, looking at it just simply, there is one green light, right? So if you are buying stocks or buying dips, whatever it may be, just know you're doing very aggressively. Now, I'd be more focused on essentially, risk mitigation, protecting profits, things of that nature. If you are going to buy stocks, buy right, obviously a good idea to have, some kind of insurance in place. Now we're looking at the MTI here. Look at the MTI, 0.79, right? Where does it historically like to find a bottom? Now it's not always guaranteed and there's no crystal ball, but historically speaking, around 0.6, right? We see, it got back here to 0.6. About 0.67, the market was looking for a bottom, right? We saw some optimism, some quick optimism in the market, but it's been, slowing down ever since, coming back here. So right now, does it look like the bottom is in the market? No, it does not. The MTI is telling us there's a little bit more downside potential there. So I just want to tell you there's some risk involved. Now, let's go ahead and look at the intraday movement of the market. Here is the VectorVest composite. I'm going to get rid of the Bollinger Bands here. We're looking at a pretty technical perspective. We got the 20-day EMA. Along with that, we have the 200-day moving average of price. Now, if I take a look here, look, you can see Thursday and Friday. Clearly, I was off work that day. The rollover has occurred here. Now, if I take a look, we look like we broke it to a new low here, so that is clearly not good. We got a gap here. Looks like price action. Let me use a horizontal line. Close to filling that gap. There's still some room to go there to completely fill that gap here. The gap comes down to 69.95. So if I'm more of a trader, right, I'm looking a little bit more downside potential here. Yes, I see this bottom wick here, some optimism. That could be just some noise in the market. But overall, the market, get defensive, right? We saw the channel, pretty tight trading range. Market breaking out to the downside of that. So let's jump in some news stories and see exactly, what really is potentially moving the market here. Let me pull that up real quick. Again, I normally don't do the live streams here. Hopefully this is a smooth operation today. I think it's this one. Nope. Here we go. This one here. Let me drag this over. Boop. All right, we got a couple news stories today, right? Robinhood. Hot stock, right? Very hot stock. It's been on a tear lately. I know it's overvalued, but RV relative value high, right? Robinhood, I've talked about this. This was a great crypto play. If you don't want, complete exposure to crypto, but you want something that could ride off the coattails of this crypto momentum, Hood has been the play. And I've been talking about, I think it was like $10, $15. Now the stock, well above that. Let's see here. If we take a look, down 3% today. Again, the market is, it's pulling back altogether as well. Bitcoin taking a pause. I see it in the 90,000s. As far as that crypto momentum in Hood, I see a breather there. So if you are in Hood, if you've been in Hood, I would be more concerned about protecting profits with Hood right now than honestly, opening up new positions in Hood. But Todd's going to give you some insight with this. Stick around, Todd, because Todd is going to give you a different perspective than Glenn and I typically do. He's going to give you the perspective from the successful investor. I mean, this is the core foundation of the VectorVest system and really our philosophy of trading in general. So, stick around just a moment for that. Now, the next story I want to share with you, Hood obviously losing some momentum. Again, it's crypto related, right? Now, the next story, Apple, right? We've been talking about AI investment, data centers, SoftBank, all that good stuff, right? Apple, is going to be a key player here. $500 billion. I saw the news articles, but I went to their website just to get clarification. Yeah, they're committing $500 billion in this space, right? Energy. Probably going to be the play here. I don't have it in the watch list for Todd today, the energy stocks, but I do got Apple in the watch list here. But again, if we see here, look at this. The typical spots, Texas, California, Oregon, North Carolina is a big one. I know Meta's got a database center here. Michigan on the list as well. Washington. Plans, look at this. Doubling the U.S. Advanced Manufacturing Fund. A manufacturing academy, accelerated investments in AI and silicon engineering. So, it goes to show that this investment here is not just in, the data centers itself, but really the labor force, right? Educating, a new labor force for all these jobs, right? There's going to be huge growth potential here. You can see Apple, positioning themselves very wisely going forward. Now, the next story I've got for you, quantum computing stocks, right? China claims milestone for the Wukong machine. Now, like I said, I was off Thursday and Friday, so when I opened up the VectorVest 7 system this morning, check out the market, I see the sell-off, so I was like, well, what happened, right? So I pull up the news. I'm not surprised. We saw like DeepSeek, right? The AI race. It's going to be the same thing. It's going to be the quantum race. So we got a semiconductor race with China, AI race, quantum race. It's all, forward-thinking technology, right? We talk about this a lot on the channel, and that's creating some havoc for the U.S. stock market. So we do have some quantum stocks in the list for Todd for you to, break down, analyze, along with some of the other mentioned names, IBM, Google, some of the big players in the space. Now, the last story is really a pair here, Palantir, right? Palantir, this is Glenn's baby. Glenn's been on track with this thing. He's been telling you, treat it like a momentum trade. The momentum is gone. And there was a chart pattern I saw last week. If I drew some trend lines on the top end of price action, we rejected that. A clear rejection. The rejection has had, multiple days of follow through since then. But the articles I have for you, because, our biggest argument against Palantir, as far as, a VectorVest proprietary perspective, the valuation, right? The company way overvalued. Story after story. Here's 3 of them here. Look, Palantir's pricing multiple in focus as Pentagon budget cuts loom. Now, I went through this article. I think it was like 25%. Let's see here. I think it was 22%. Where is it at? Oh, it might be locked. Here. Oh, here it is right here. 22% of Palantir's government revenue comes from the U.S. Army, right? We're all about Doge. We all know about that stuff, right? I don't like to get into politics. But yes, that is a concern. That is a concern. I think Palantir honestly will navigate, these cutbacks because it does, a lot of companies, a lot of, DoD projects utilize their software to be more efficient, right? Save money. I think they're going to benefit in this. But the problem is they're multiple, right? And look at this right here. Palantir, 83 times sales ratio, right? This is Seeking Alpha. This is a news source that Glenn utilizes a lot. The sales ratio, astronomical. Look at the PE ratio. This is on Google here. Look, stockanalysis.com. Price ratio, 514. That's astronomical. So whether, we obviously focus on more than just a PE ratio. sales ratio, things of that nature with our valuation. But just to give you some other perspectives, it doesn't matter how you slice the pie. Palantir, way overvalued. I know, there is some justification for some of its price action, but it's still overpriced in my opinion. Treat it like a momentum trade, right? Use some trend lines, moving averages, something simple, whatever you're thinking as far as, getting in and out of the trade. That's really going to be, whether you're an investment, a trader, things of that nature. But these are just items I want you to focus on here. Pennywise, IBM might surpass Microsoft and Google. Underdog might shine. Yes, a lot of talk here. Pennywise, Palantir's product line is exactly the sort of thing that will thrive in this current political climate. That's why I said, as far as, its ability to navigate, trying to make the Department of Defense, Pentagon, wherever it may be, more efficient, I think it'll be fine in that suit. The problem is just the multiple, right? The valuation, if we saw price action rise and we saw valuation tick up a little bit more, I'd be more optimistic about the stock in general. But as you can see, investors taking profits right now. So again, Palantir, more defense. We'll see if there's any levels there as far as, any kind of potential buy the dip scenario. But right now, market sentiment, just the way it is, and just the sentiment of Palantir, not going to be, on my first thing to do this week is, think about when to buy Palantir, right? I'd be more defensive right now. All right. So I'm going to hand it over to Todd. Now that we went through the news stories.
Okay. So we're going to go here, and then Todd, you can share your screen.
All right. So Todd's going to share his screen in just a moment here.
All right, you're good to go, Todd.
All righty. So
Ryan,
back in the program here. Excuse me.
Sorry, Ryan, you do need to drag this over to where your program was.
This right here?
You'll need to drag the teams over. Yep. I can't see what you have, but you see Todd's screen. You need to drag it to where you had your story up, where the Yahoo Finance
right
is, where you had Yahoo Finance.
This?
Again, I can't see what you're saying, but yep, you got it now. Yep. That's
okay,
it.
Perfect.
All right, we're good. Thanks, Todd.
All right. So picking up where Ryan left off, I don't know if you saw the special presentation that Ron Wheeler did this weekend, where he outlined how in the successful investing method or approach, we manage our stock trades. And so this is a nice little segue into that. We are offering the Successful Investor course for free. I don't know if Ryan has a slide for that or not. You can see it down here on the bottom right screen for me. For our subscribers, if you're a subscriber to VectorVest, then this course is free to you. If you're not a subscriber, then simply sign up for a trial. I think it's $10, and then you are a member, and you can come to this course for free. But the key takeaway here in the context of this conversation, and you heard Ryan say it a couple times, the approach for Glenn and Ryan are often momentum trade kind of timeframes and approaches. In Successful Investor, we're much more investment focused. We are position traders, which means we like to hold our positions weeks to months, but really as long as we can. So closer to a prudent, conservative frame of mind over objective for our trades. And so the way we look at the trades varies a little bit from the momentum play. And I think it's helpful. And even if you're a trader, the difference in perspectives can be helpful, I think. So I put Ryan's picks into my watch list here. And so they're sorted by our VST indicator. Mm-hmm. So we evaluate all the stocks in our database for value, the upside potential, we call relative value. Will it outperform a corporate bond? Safety and current price trend. And then the VST analysis balances those out. So you're getting some free data here today, but ultimately it becomes very easy then to look for good candidates, whether you're aggressive or prudent. So for instance, Google, currently priced by the market at 182, we're valuing it at 238. That's undervalued by the market, so that's a good thing. Has very good upside potential, very good safety. Price trend is a little weak here at 1.05, but just north of flat, and it has a favorable VST score as well. Now, a couple things that you might notice if I scoot to the right here a little bit. Currently, they are earning $9 a share, growing those earnings, and these include forecasts, at 20% annually. Sliding to the right, I can see they're also paying a dividend that's yielding 0.44%. That's normal or regular annual dividends. So I've got a lot of information here to help me parse the good candidates, the quote-unquote good candidates from the quote-unquote bad candidates, depending on your perspective and your objectives. So for instance, as I just go through this list, right, Apple, slightly below average upside. In other words, they'll slightly underperform that bond, but good safety, and it's in a stronger upward price trend currently. They're making money, but they're growing those at a rate of 7% annually. So a little slower growth rate than Alphabet, which can enter into your analysis. They're priced, though, at $247, valued at $148. So if I'm an investor, of course, I'd prefer to find stocks that are undervalued because it puts another piece of probability in my favor. But there are some companies that are just perennial winners that I might pay a premium to be in. But if that's the case, that they're perennial winners, then they probably have better fundamentals. So a couple tools there to help me work that out as I come to the lowest VST stocks on the list. Palantir is making money, growing those earnings at 22% annually, but they're having upside potential problems here just based on that score. They're in a slight downtrend. And Rigetti, very weak fundamentally, overvalued, as was Palantir, and they're losing money and accelerating those losses at a rate of 6% annually. So just, I call this looking at VectorVest by the numbers, because it helps me kind of eliminate from consideration those companies I'm not even interested in looking at. And particularly in tough economies, I like to come over here and look at sales growth. And certainly somebody whose sales are shrinking or appreciating at a very underwhelming rate, it's really hard to keep pace with your profit margins if you don't have growing sales. So that's VectorVest by the numbers, and typically the first pass that I'll make on any candidate stock. But really, the bread and butter comes when you look at the stock graph. So what we teach in successful investing, let me get rid of some lines here, is we start with a 1-year time frame. I'm going to take off support and resistance. And the first thing we're looking for, I have earnings populate on the graph because that makes it easy for me to track how soon is the next earnings announcement, because I don't want to be within 2 weeks or so of the next announcement because of the volatility. But ultimately, I'm looking for price action that goes bottom left to upper right, driven by earnings performance that's going bottom left to upper right. And when that's a good fit, you'll often see this RT indicator stays above 1 for the majority of the time. Now you can see on that momentum play that right now, RT, which is that price trend, has been falling. So weakening trend, still positive, above 1, but weakening with this price pullback, to Ryan's point. So how do we use this? Well, if I like this price pattern, and particularly the earnings pattern, right now, this stock is in pullback. Well, of course, the market is down too, so we're going to pretend that the
Todd?
You froze or something? You lost him. Oh, there you
Yes,
go.
sir.
There he goes.
You froze for a second. We're going to pretend something and then you stopped.
Okay, we're going to pretend that the market is favorable for the purpose of this conversation. So if I saw this stock today with the market rising, the stock's not rising with the market. I'm interested in buying rising stocks that are hitting higher highs and higher lows, that are in trend. So Google becomes a candidate for me when it starts or resumes uptrend. So how far off of the pivot you want to come right? If this price started going higher from here,
Mm-hmm.
if I was trading, I'd put a stop right below that pivot and try to buy the dip, get in early. A little more prudent approach would be wait for this price action that had been pulling down to move up, establish a higher low, maybe even a higher high. That's the more prudent approach. You would be slower to re-enter, but you have more evidence that the downtrend has reversed, has ended.
Todd,
Right?
Glenn and I talked about this before, tiptoeing into a position.
Mm-hmm.
If I was to tiptoe and say Google, and like you said, just hypothetically speaking, the market is a little bit more favorable. If I, was to tiptoe in position, could I go half in on the position based off of the first example, that pivot example, and then maybe do some follow through with that, that uptrend confirmation that you're speaking of, finish the position out? But if I get that confirmation, is that, some guidance you would almost suggest?
So here's the I don't know, explanation, for want of a better term, right,
Okay.
of what's going on behind that question, right? Because this stock is in downtrend.
Mm-hmm.
When it makes that first bounce, we don't know if that bounce is just the next lower high before it goes to the next leg down, right?
Correct.
So to your point, the market is turned. This starts moving higher, right? So I need to see at least a candlestick pattern here that shows me hollow green candles hitting new day over day highs,
Correct.
right? But when I do that entry, to your point now, I can put that stop loss. And if I do an undersized position here, then I've mitigated the risk of getting in early and then have this thing turn around on me.
Okay.
So then a nice time to add to that position would be after the uptrend then actually does reestablish. So that's kind of a variation on the theme of what we're doing in Successful Investor, but ultimately the stock has to be an uptrend. The closer you get to a one candlestick formation bounce, the more risk you're taking on, and by definition, we're much more prudent in Successful Investor. But that's a nice setup, and thanks for the question, because ultimately you start getting a feel then for how you have a range of approaches you can take depending on how much risk you're willing to accept. And that's a product of your temperament, your sensitivities to loss, that kind of thing. So if you get anxious about the stock price on the first red candlestick, then your sensitivities to loss are much higher.
You
right?
probably don't want a lot
you
of
need to be more
risk
averse.
if you don't like red candlesticks.
Yeah. Fair to say. All right. So what I'm looking for here on Google, last piece, then I want to try or add support and resistance to this graph, because I want to avoid stocks that are coming up to a prior resistance level.
Okay.
So even if Google took the bounce, right, it's not until it breaks above this resistance level that I'd be interested in taking the position, because I'm so close to that resistance level. I'll come into 3 months.
Yeah, and an $183 stock, what's, to give up $4 for confirmation,
Yeah, exactly right. So let that thing break out above, then you have at least the prior high. You might see some resistance at the gap, by the way.
Mm-hmm.
But we can at least get up to the prior high would be the goal, the objective, right? At least for the first leg of the trade.
Correct.
If I can get up to 207, then that's enough of a gain that I can start protecting something, even if price stalls at that higher level. All right, so then it's easy to apply that consistently across the charts, right? So here on Apple, stock is trending higher, earnings are trending higher, they plateaued, sure. Stock pulled back, and unlike we saw with Google, this did take the bounce, pulled back to a higher low, and is right at the prior high. So in terms of resumption, Apple is much further down the road of showing me sustainable trend than was Google. I think I can leave it at that because ultimately, you have the playing by the numbers was part of this equation as well, right?
Yeah, no, definitely. But Apple, like you said, it is making it looks like it's about to take out that previous high if it hasn't already. I have to zoom in on the graph and see. But like you said, we'd want favorable market conditions before we just bought Apple. Even though that the chart of Apple might be showing some confirmation with this uptrend here soon, we'd want the favor of the market, correct?
That's right. And it does look like it's slowing down here a little bit.
Okay.
But again, by the time we get a green light, I think the tail of the tape will be discernible.
Okay.
And here's Robin Hood, your character that you were discussing earlier. And yeah, what a beautiful graph coming into that high, right?
Correct. We got the gap up, filled the gap rather quickly.
Rather quickly, right? In terms of slope of that line, right? That is, falling off the edge of the table.
Mm-hmm.
Earnings forecasts are still solid here. RT, while it has retraced on that sell-off here, still above 1, but you're right. I don't know how far down is. So
Correct.
I certainly want to wait for that pivot, and then it's the same kind of considerations that we saw on the other reentry analysis, right? I want to see it make the turn, not only take the bounce, but put in the higher low and resume uptrend. That's ultimately what I'm looking for.
And that's a much more responsible way to get into any kind of dip situation. Because a lot of people just end up, finding themselves trying to catch a falling knife, which is exactly what we don't want to do.
That's right. Because just look at that example, right? Had you bought into, what you thought was going to be a support level, not so much. And then you get yourself in the situation where you're hanging on to it because the loss is kind of bigger than you'd like, and you're waiting for it to come on back. And then assuming it does come on back, which it may, you're 2 months down the road.
Mm-hmm.
And so you had dead money in that trade for 2 months where you could have put it in something that was actually working for you from the jump.
Correct. And I love one of y'all's sayings that you say in a Successful Investor. And it goes up along like this, that you guys want to buy stocks that are already doing what I want it to do. I'm sure you've heard that saying.
I have. In fact, I've said that saying a couple times.
Yeah. Which is nice because so many people, and myself and Glenn, I know we do it quite a bit, but we try to guess those pivot points. And if you're not disciplined enough to, stick to a stop at those pivot points, taking this approach, the Successful Investor approach, is a lot safer, right? Because you're already finding stocks doing what you want them to do, rising in price in a rising market.
That brings up a great point. One of the things that helps me manage this Robinhood trade is that it has steady, progressive price action without a lot of volatility. I call that defining normal behavior. So through this whole time frame, let me get a log scale on here. Through this whole time frame, right? The price has been manageable over this past year.
Correct.
Just using the VectorVest stop price as an example. I probably traded this twice. This most recent pullback shows you how when price really accelerates quickly, see the distance between the high and the VectorVest stop price?
Correct.
If I'm using that as my stop, I can get overextended when price gaps or goes parabolic.
Okay.
So we have some methodologies we use. For instance, in this case, we would put a little soft stop right behind right under the low of that gapping candle. And this helps us once we're in the trade, right?
Correct, because once it surpasses that level, typically stocks want to fill the gap. That's gonna be my first red flag.
That's right. So once we filled the gap, then we would have put our hard stop right under that candle and closed the trade 3 days ago.
Okay.
Right. That helps us lock in gains. Of course, the entry then you don't want to enter on a gap or on a parabolic rise. When you're doing this more prudent kind of approach. You want to wait after the gap. Well, I need to see a higher high and a higher low, that the thing's going to gap and run, that more people are still piling into the trade. And of course, you should see that on higher volumes as well. All right, but that's Robinhood is a great example there. And Microsoft is a good example too, because if you just looked at that chart,
Mm-hmm.
this line probably tells it for you, right? How would you characterize that chart, that price movement on a trend basis?
A waste of my money over the last year.
Well,
Unless
flat,
I was
right?
trading it,
To be a little
the
more charitable, I
volatility
just
hasn't
call it
done
flat.
anything.
So yeah, my problem is if I'm looking at getting in on this trade, I can see just eyeballing it here, the price
Yeah.
action is, ranging between those purple lines.
I would treat this like a trade. Try to buy in at closer to the bottom purple line. Take profits, closer to the top purple line would be the easy route here.
Exactly right. But if I was investing in this, if I
Mm-hmm.
didn't want to just play bumper ball here,
Correct.
because it obviously doesn't have to go all the way, right? It can
Yes.
reverse on you, and then you're playing this middling game here. But ultimately, I'd like to watch this thing break out to the upside. I like the earnings picture, but the price action needs to break out of this range before I'd really be interested in this as a long-term investment.
Now, John Boston made a good point. Glenn would name this a poopy stock. Maybe that can be one of your new exquisite successful investment terms.
I don't think that's going to happen. No, I don't see it. All deference to Glenn, no. We'll leave that in his dictionary.
I tried, John.
All right, so you get the idea that, yeah, there's a trader's opportunity here, but it's not much for an investor.
Correct.
And what do we think about IBM? Well, it is higher than it was a year ago, but it seems to do these fits and starts, right? Here's earnings, it gaps down, kind of consolidates there before it starts running again, which is great. Love it. Gaps down on earnings again, kind of recovers, consolidates over this time frame, has another earnings event, gaps up, and now what's it doing? Right?
Consolidating.
Same horizontal line stuff.
Yep.
So I might play IBM. I'm just looking at the price chart at this point. I'll make this earnings point here in a second. Just on a price basis, I'm interested in IBM only if it can break out of that channel after it's broken out of that channel, right? Because otherwise it can break down as much as it can break higher, particularly when I see that the earnings are tailing off. So what we're looking for is,
gotcha.
Yeah, we want bottom left to upper right on the earnings as well, but because we include earnings forecasts in our earnings data point, the forecasts have been weakening here. Those are coupled with the actual performance, but I'm definitely in backslide here. I like to use a threshold of about 10% or so.
And you make a good point. Just for everyone, especially if you're new to the channel, our EPS is not what you're going to see in your broker. So, no point wasting your time calling us. We already know. It's a 12-month leading forecast. So I just want to put that out there. It's very important and it's very different than just current EPS.
And I'm interested in the forecast. Now, these are our market analysts that are making these forecasts. This is not the company's forecasts, right? Mm-hmm. So the market analysts are forecasting weaker earnings performance. I'm interested in rising earnings performance, or at least stable, right? When it's in retracement, then I'm much less excited, particularly in tough economies where that can be the forebearer of financial strife. Right?
Now, Todd, just curious, if we go back to IBM, good example, or even Palantir, how much do you guys weigh on the valuation of a company when it comes to the successful investor, and more of just an investing approach rather than a momentum or swing trading approach?
Yeah. So remember, we talked about this when we were looking at doing it by the numbers. We favor investing in undervalued stocks because ultimately price and value meet over time. And so if the value is above price, then you have kind of that lift in the price. While it's, in terms of probabilities, it is impactful. It doesn't have to be, right? It's not, there's not a direct correlation that it has to happen kind of thing.
Correct.
But that would be my favorable piece. If I don't have that correlation, if I have a situation where the market has bid up the price, well, we're talking about crypto, right? But typically that exercise of the market pouring into that particular stock is because we're expecting outsized performance into the future.
Okay.
Either because the company has strong fundamentals and is maybe there's been a change to the business, maybe not, but the company has a proven track record of being able to make money. They have an established client base, a good product, they're well managed, that kind of thing, and they're still in growth mode. You can have other companies that are relatively young, don't have that track record. Weaker
Okay.
fundamentals is how I would characterize that overall. And that's a much sketchier game trying to play a valuation model on that kind of company, particularly when they're already overvalued.
Okay. No, that's definitely a good point to have.
So we like to say earnings is the engine that drives that valuation bus, right? As the company makes more and more money over time, that drives or commands a higher stock price,
And I'm
right? Because they're making more
noticing
return.
when the earnings per share drops initially back in November 2024, before it started rising again, that's kind of when the valuation kind of stalled out around that time period as well. So you're having, earnings per share, having some hiccups along the way and the valuation decreasing. So yeah, I definitely get the point from over an investing perspective. I don't see those as favorable conditions.
Right. So we look at a lot of things besides just earnings growth rate in our valuation model. We do also include macroeconomic indicators, considerations, particularly interest and inflation rates as part of that valuation. But
and it's funny you say that because I remember getting a question about Nvidia, the equivalent on the TSX, the Canadian exchange. And in Canada, it was overvalued, but in the US, Nvidia was undervalued. And I forgot, I think it was Steve Chappell who told me it's the interest and inflation is different amongst those countries. So Steve Chappell is saying, yeah, if I had access to both markets, I'm going to pick the US Nvidia because it's better priced than that of the one trading on the TSX.
Okay. So two more, Palantir. So this is very similar situation, right? Nice price pattern, fell off the shelf here, fading the gap. But again, I'm just looking for the reversal and maintenance of that trend, particularly if I can stay above this little resistance level, which should lend some support.
Yeah.
Right. If we can stay above that, then I feel much better about that trade moving forward on a resumption basis. And Rigetti. Is it Rigetti?
Yes. This is a quantum computing stock, very popular amongst the retail traders. We've kind of said, treat it more as a trade.
This is interesting, right? So you see the slope of that price action. Remember we were talking about price getting overextended?
Parabolic.
That is parabolic. So what we're typically looking for is if I just took this, take RT off so I can find the dividing line here. There it is. If you just connected the corners, and I know it's a rectangle, but that's roughly 45 degrees. We think of that as sustainable price movement.
Correct.
So when we start taking off well in excess of that, and it really started here with the gap, right? That's not typically sustainable. So the problem is making an entry once this parabolic move is exhibited itself. You're starting to get way overextended from your potential stop loss, the VectorVest stop price. And that would be true no matter what your stop loss is. You're getting overextended. Great momentum play, but you better be able to have a selling technique that has a pretty short leash on this because typically you have the matching sell-off, right, once the price is actually peaked. And you saw that here, the slope of the sell-off after the gap down. So just even though it's normal price action where we took back about half of the prior move, the sell-off is pretty dramatic and pretty fast. So particularly if you're trading, it provides a challenge. If you're investing, well, let's look at the broader picture. I'm going to take off my lines again. If I was looking at this stock as an investment instead of a trade, well, first thing I see is that my earnings flag is right up over here. So the next earnings Now, this is the last earnings, right? But I
Mhm.
expect that mid-March, I'll see another earnings event. So what does that mean? Well, typically it induces volatility.
Mm-hmm.
The other piece that I see is I got a nice bottom left, upper right slope on that earnings line, but I notice that it's still negative. So they're improving their earnings picture by losing less, but that's a lot different than gaining.
Making less.
That's right. So ultimately, you know, as you particularly again, now we're taking this from a prudent to conservative investment kind of approach.
Mm-hmm.
If I'm looking to have an investment in this company or any company, particularly when you have tough economic times, a non-profitable company is relying heavily on their line of credit, their ability to borrow to operate. And when you're in an environment of rising inflation rates and interest rates, that becomes harder and harder to do. So it's really hard to maintain or sustain that earnings performance or improve it in particular when you have that kind of setup. So again, our GTI might be valuable as a trade,
Mm-hmm.
but as an investment, I'm looking for more track history of actually being able to make money so that they can sustain through all economies. All right, but that's how we do it in Successful Investor. Those are the things that we're looking for, and a little bit about the why. And the big takeaway, I hope, for folks is that it all starts with your objective for being in the trade. So you should have a set of trading rules for your trading system that works to deliver on those objectives. So if my objective is to aggressively swing trade, right, I need a rule set that supports that approach. If I'm looking for less trading activity, more conservative kind of approaches where I don't have a lot of price volatility, I get to sleep at night, right? Then that infers a set of rules that looks for fundamental performance as well as that price performance over time. All right, and then from there, we have a routine on how we capture these gains. I gave you a little taste of that, but ultimately, just for today, I want to kind of define what is a successful investor, what is our approach, and does it have a place for you? Well, hopefully you have in your trading portfolio a range of performance metrics, right? You may have an aggressive portion of your portfolio, for instance, that you could swing trade, but I hope you also have an STAG side of the portfolio.
You can't just gamble it all away.
Yeah, hopefully so.
Don't put it all in quantum stocks is what Todd's saying, please.
What I would suggest is it might be prudent to make sure you have these kind of fundamental skills in place, because it's a lot easier to start here and then ramp it up than it is to start ramped up and try to slow it down. Right? Because what that does is all of a sudden you're trying to sell this stock on the second red candle, because on your swing trading plan, that's what you want to do. Well, you never get to a 60% gain on a trade if you cut it off when it was up 10. Right? So all we want to do, keep alignment on your trading objectives and the kinds of stocks that you're trading, the way you're managing them. And that's what we teach in Successful Investor.
And just in case you missed it, Joey did put the link in the comment section. Now, you'll see it there, VectorVest.com/TSIC. Now, Todd, the Successful Investing, we have a coaching room, correct?
We do.
Now, in case you are not aware of this, I know there are some customers out there. If you have access to VectorVest 7, the real-time subscription, you already have access to all of this information. You already have access to Todd and Brian, and I'm going to show you that. Or actually, Todd, do you want to show them? I know it's on the training section.
Yep.
So yeah,
so
when
within
you're in the VectorVest 7
program,
software,
this is, we call it the quick start course, right? So by definition, this is the little one postcard version, right? So the quick start course gives you an overview of how the system works. But you can see these are short little videos, all in, I think you're like 90 minutes. It's the quick start course.
Okay.
The free course that we're starting next month takes each of these topics and makes them like an hour, hour and a half, right? So we go much more into the granular detail of how you apply and manage your stop losses, for instance, right? How you analyze stocks for which ones you want to take a position in, how to structure the portfolio to manage risk, those kinds of things. All right. But this is available to everybody right off the bat.
Okay.
And then the coursework will also be in our coaching service as well. All those links and everything will be afforded you if you register at the link that Joey gave you.
Perfect. In addition to that, we do have the community room just over on the right-hand side. We do have additional, that's actually where the daily color guard is, the successful investing, group coaching, even our higher level tiers, with the swing trading, Ron's options, the URS, it'll all be located in that investor community room, depending on which level of subscription you have.
So yeah, we'll do the course in this room because it's available to all subscribers.
Mm-hmm.
The other coaching services are in their own distinct rooms.
Okay.
So this is kind of the public room for everybody.
Okay.
And then we break it down from there.
And I did find out, because I didn't know it, I just found out a couple weeks ago that even if you only have access to the VectorVest app, the mobile app, which is $19.99 a month, that will give you access to the community room. You just go, when you pull up the app, just down at the bottom, it says education, and then you'll see a link for the community room. So just check that out when you get a chance. Well, Todd, is there anything else you want to cover?
No, that's it. I hope this is helpful for folks, and love to see you in the class. We start, is it next week, 2 weeks, something like that?
Yeah, it's hard to believe March is next week, actually. So yeah.
No kidding.
Well, I'm glad the snow will be behind us. Hopefully no more snow. All right. Well, yeah. Thank you for joining us, Todd. Definitely a pleasure. I know it's a little bit different because Glenn typically does this live stream. However, great opportunity to, work with you. And honestly, because I do a lot of these other videos, I don't get to, really talk to you too much about your strategies and the successful investing approach. But it's a very logical, like you said, prudent approach. You're not gunslinging. I mean, you're looking for simple, levels of confirmation, rising earnings, utilizing the homepage of the VectorVest 7 software, rising market. It's just an easy way to, to play the market, it seems. You're not overcomplicating or reinventing the wheel.
Well, and the benefit of that is it keeps you in I call it the intellectual zone, right? So many of us have anxiety about losing money in the trade to the level of, one bad day and I want to close out of the position. Mm-hmm. So a lot of what we do is keeping our emotional selves at bay, making intellectual decisions, following the trading plan, because you'll see in short order how turning down the gut stuff works better over the long haul when you keep your emotional self at bay and just play the probabilities and execute your system.
Love it. All right, Todd. Well, hey, good luck to you. Speaking of, losing money and getting nervous about the market, we're about to talk about Nvidia's earnings. Take a look at the chart here. Take a look at Palantir. But thank you, Todd. We shall see you again. And hopefully, I was talking to Joey where potentially we might do this in the future in the training center, kind of like Glenn and I do on AMA with some of the instructors. So hopefully that'll take place. But hey, enjoy the rest of your afternoon and let's get to it.
All right. Thanks, Ryan.
See you, Todd.
Thanks, Todd. Ryan, you'll need to move this Teams chat over to like your third monitor and then reshare that screen for me.
All right. I see your share. I think this is it. All right. There we go. We should be able to see my screen.
I need the one with the OBS and
you need
the one with OBS.
Let's see here. This one here?
Yep, you got it. And then just hit allow at the top.
allow. Where is allow? Oh, allow. Boom.
All right.
All
Thanks,
right.
Todd.
All right, getting back to it here. Look at the VectorVest composite. Ooh, look at that. Look at a little buying pressure here right in this level of support. Let me take over the mouse, Joey, or do you need the mouse?
No, it's all you.
Oh, there we go. All right, we see the wick here coming right in at this level of support, right? So we're just talking to Todd, right, about pivots, right? So again, this would be kind of a pivot situation, right? We've got no confirmation. The only thing we've got right now as far as optimism is some buying pressure, and here would be my stop, right, when it comes to the broad market. Now, if we got some kind of pivot, some follow through tomorrow, that would be the trade, right? Now, if we got, again, what Todd was saying, a higher swing low and a higher swing high, that's where the confirmation would come into play. So right now in the market, we're not getting much of any of that. So again, the VectorVest composite, the homepage here. Oh, look, we did have some red lights. Now we're getting some yellow lights here. Some optimism in the market. Again, let's be honest here. Nvidia, that's what it's all going to come down to. So let's just take a look at Nvidia. And we're going to take a look at Palantir real quick. PLTR, NVDA. All right, so first Palantir. So you see this trend line here? Boom. Rejection. Clear rejection on this trend line. Well, Ryan, where'd you... And you see I did create it back here. So obviously it worked out pretty well. But you might be saying, Ryan, where'd you get this trend line from? So if I go to a year... Oh, there we go. There it is. I just did an upper trend line here. That's why I was getting nervous about Palantir. And because of the valuation, we saw all of those things come into play, right? And just like what Todd was saying, especially this right here. Let's see, a freehand line. This is a parabolic move, right? That's parabolic. That's not sustainable, right? We got the buy recommendation. Let me get rid of RSI here. But you can see that is a parabolic move with the gap as well. Now price action has broken into the gap. It's below its 20-day EMA. It's at $93. That's 30% from its prior high. So again, when it comes to Palantir, protect profits right now. I mean, the gap, if we take a look here, do a horizontal line, you see several touches here right at the bottom of the gap, right? So again, if you were going to do some kind of bottom fishing, it would be closer to here and see if we see a pivot. But we're in a situation where you got to let the trade come to you. As far as buying a dip in Palantir, it's very similar to what Todd's comments on Robinhood. There's just so much momentum right now. It's like catching a falling knife. Take some of those principles that Todd just spoke of from the Successful Investing course, apply them to some of these stocks, right? Look for those pivots. Look for a change in actual trend and confirmation of that trend, right? It's a simple definition, right? Higher low, higher high, right? Right now, we're not getting that by any means. It's just a straight down shot. You buy this stock, good luck. It's a risky bet all the way around. Now, the next stock, Nvidia, because I know we got a few minutes left. I just want to talk about Nvidia real quick, and then I'm going to take your stock picks. I got lines all over Nvidia. All right, we're going to get rid of this line. Most recently is this situation right here. I connected these two dots, right? You could see the downward trend appearing. Rejection. Trying to find some buying pressure here at this 20-day EMA, but consolidation overall. Now, if we take a look, scroll back, we do have a higher low, right? There's the low, higher low, this high, higher than that high, high. So, yes. So, if this low, this wick here, if I'm going to buy Nvidia, essentially I'm putting my stop right around this low right here. Oh. There we go. So it's around 129, about 129. Because if I take out this, it's going to be a new low, and that could see that, the trend turning around, right? Right now, Nvidia is trying to figure out what it wants to do. Earnings is in 2 days. One of Todd's bits of, pieces of advice from the Successful Investor is look at the earnings calendar, right? If you're going to buy a stock, why buy it 2 weeks, roughly a week or 2 weeks before the earnings date. You're just taking on a lot of unnecessary volatility. And again, that's from a prudent, more conservative approach. Now, if you want to be aggressive, yeah, there's a million different ways to play Nvidia when it comes to the earnings. But if you want to be more conservative, honestly, if I'm going to buy Nvidia, I would do a buy right now. Because of what you're selling, you're probably getting a lot of money on the premium right now because it's 2 days before earnings, right? So if I am going to buy Nvidia on this dip, I'm going to put some insurance on it with a buy right now, collecting some premium. Yeah, that's going to, obviously cap my, profits, selling that call, but it doesn't mitigate risk. Because again, from the successful investor standpoint, it is, to mitigate risk. Now, again, when we were talking before, is hypothetically the market, right, was doing better than it is now. It's not. You are taking a lot of risk right now. Look at Nvidia. We've got one green light since February 5th. So I just want to take that note for you. Now, here are the stocks I had from the news articles, right? The big, where is price? Now, as far as momentum, all we're getting is Google, Apple, IBM. The big loser today is going to be Hood and, again, Palantir. But at the top of the list, you got Google, Apple, Hood. Palantir is ranked down here with Rigetti, right? Look, fundamentally, not there. Even the RTs are now below 1. So as momentum trades, now with the RTs below 1, well, Palantir definitely more recently than Rigetti, that momentum trade opportunity is now becoming more limited, right? So, or lack of opportunity, I should say. Let's see here. Nvidia is plus or minus 11 points for the week. Expected move. Okay, that's going to be on the options. I may play an IC for this premium. I did half of Nvidia last week and buy more after earnings. SMCI. Let's take a look at SMCI real quick, actually. You know what? Let's go ahead and put in the stocks here. Customer picks midday. All right, give me... How many likes do we got here? Let me refresh. We've got 69 likes, so I'm going to give you 7 stocks. I got to delete these. All right. SMCI, PSIX. AIoT. Oh no. What? All right. Well, I can't get the comment section. All right. We'll have to do it this way. AIoT. CHGG. How many is that? We've got 6. We need one more. ISRG. All right. I go off by the likes. So we had 69 likes at that point. So we got 7 stocks here. Every 10 likes, you get 1 stock. SMCI is at the top of the list. RV. I mean, it all comes down to the accounting risk. I mean, we all know that. Broadcom, I like Broadcom a lot, especially with the AI play here, becoming a major player when it comes to U.S. AI chip manufacturing. AIoT, let's see here. Big mover today is going to be Chegg, up 10%, and it's a sell recommendation, so let's go ahead and get in the graphs here. There it is. All right. Again, last week I did a video, right? Was expecting a clear break. Retest. I said retest on the 200-day moving average last week, right? What is it doing? Retest. If you didn't buy that dip here, hey, as long as it stays above that 200-day moving average, and it's all about Nvidia, whatever. And I have a feeling, as long as Nvidia says AI data growth is strong and there's no, accounting bad news when it comes to SMCI is probably going to fly. Let's be honest there. But yeah, as far as, any kind of trade opportunity, I just want to see it stay above the 200-day moving average. If it starts dropping below it, get defensive, and I would want to see a close or 2 closes below it. I don't want to see, just a bottom wick here. I like the buying pressure below this 200. That is a good sign right there for the bulls. Yes, I'd like to finish the day with a bigger body to the upside, and we'll see how time plays out. If you're in the position, again, as long as it stays above the 200-day moving average, that's good for the bulls. If it drops below it, mitigating risk, protecting profits, that's going to be the focus, right? I mean, I don't know where you bought it at. I've been talking about it. I think it was about 24, 25, definitely in the 30s. I mentioned it. It got up to 65. You can't be that greedy. And it's only been like 2 or 3 weeks. So again, take some profits, more opportunities. Here's Broadcom, right? Clear rollover the last month. It's got one positive day out of the last 7 trading days below the 20-day. No, not going to buy it right now. Big gap here to fill, right? We're about to enter that gap. I'd be careful of this, right? Definitely be careful of this one. I mean, I did a short earlier today. The momentum and just the sentiment when it comes to semiconductors right now is not as positive as it was before. I'm not going to say there's not opportunities. I'm not going to say that the semiconductor run is over. But I'd be more concerned about protecting profits than buying right now. I'm not, with the market and everything going on, I'm not screaming out, hey, let's go buy some Broadcom today. It's just not the way it is right now. But I see Broadcom here. Look, we are really just flirting with entering that gap once again. We never really closed it before, so there's some space here. Wouldn't be surprised if we got somewhere in this range down the road. Obviously, it depends what the market does. But if you are in Broadcom, we're at 214, right? If you surpass, say 200, you're getting below these wicks. That'd be my stop. That was that 7. And then there's more of a trader stop as well. That's about 8% stop here. That's pretty tight. And that'll definitely give you a sense, because if it goes down, past this 200, creates a new low, hey, we could easily get back down to, was this 185 here? If that was a scenario, wouldn't be surprised me at all. I mean, look, the 200-day moving average, 177. You can see it's found a level of support there, utilized it in the past. So, as this kind of tickers along here, I wouldn't be surprised if that helps bring up that 200-day. Probably about this 185, maybe closer to 200, and then price action wanting to find another level of support there. I'd probably wait for that scenario, but again, it's up to you. If you do own it, I'd probably be selling calls against it. Here's Excel, right? I mean, it's definitely utilized that gap as level support here, gapped up. I'd have to take out the high, especially if you are thinking about buying it. We're at 36, the high just shy of 38. I mean, about $1 away from that high. Wait for the confirmation. Otherwise, price action, it is in an uptrend right now. Maybe use the 8-day moving average. Yeah, the 8-day gives you some wiggle room. So it really depends on what, if you're just trying to swing this, for a quick buck, or if you're looking for confirmation. If you're looking for confirmation, it's going to be surpassing that high. You see several touches. If I use a horizontal line here, right around in this level, right around in here. Several touches. We're at a resistance zone right now, right? Somewhere in there be the upside of that. Breakout to the upside of this, right? Wait for the confirmation. You're at a high right now, right at resistance. Not going to rush the trade at all. There's no point rushing that trade. Here's Power Solutions. Clear rollover, moving averages not in our favor. Even our strong buy recommendation or buy rating, losing that as well. Now it is a hold. We see price action getting closer to this 200-day moving average as it has done in the past. New low, if we see here, new swing low here. So that is also not good. So yes, with the sentiment of the market, I'm not here for it right now. As far as any kind of level of support, level of support coming way down there. We're at a resistance right now, or just below resistance, 3608. If you want confirmation, I'd get above 3608. And you notice the top of this zone here, the top of this resistance zone will put me right back above that 20-day EMA, showing momentum to the upside for the bulls. So right now, again, it broke this level of support, now becoming resistance. Definitely more bearish than bullish right now. If I go down, here's ISRG. Look at nice lower left, upper right. Price action, I'd have to take out, see some kind of momentum. It is above his 20-day EMA. I'd want to see it take out its new high, especially it's 594. The new high coming around, just shy of 620. I'd like to see it take out its new high. Now, as far as any kind of, bearish thing here, so if I go freehand line. Now, if you're worried about, protecting profits, it is right on this trend line here, right? If it breaks this trend line, it could potentially retest this 560 level. You can see it's right on that trend line. So if you are in this for the short term, or if you're thinking about protecting profits, hey, looking at this trend line here, there we go. It's got a little bit of a wiggle room, but definitely, take an eye of this trend line. If you're thinking about buying it, again, just take out the prior high. It's not that far. I mean, it's $600 stock, and it's only $20 away from it, so it could easily surpass that. That's not a very big percentage at all. Here's Powerfleet. You see, huge candlesticks, parabolic move to the upside. Found its level support here. I like this level support at all. I like it a lot, actually. Right on the 20-day EMA, level support here, buyers in control. I want to take out today's high. And I want to see, some confirmation here to the upside. I'd like to see some green candlesticks, obviously. But I do see this as a dip to consider. But again, with the market sentiment, just know it is risky. My stop going to be right about that 20-day EMA. I'd say, about 720 in the bottom wick. Probably 715. Just give it a little room for volatility. Right now it's 733. So that's a very tight stop. So, if you don't get the confirmation, you lose a little bit and you're out of the trade. If you get some confirmation here, this stock was, not long ago, almost $9, right? So that's a lot more potential, reward than risk with this type of trade setup here. It could potentially happen. It just depends what the market's going to do, right? And Nvidia's got a big a big say in that. Here we've got Chegg, last 6 months. The 200-day moving average, it's got a lot. This is going to be my resistance here. That 200-day moving average coming in around 233. Right now it's at 159. Big channel here. I will say this. I wouldn't really get too optimistic, especially if you haven't bought in already. If you have, hey, prior low, I'd use that as my stop. But as far as confirmation, you're looking around 175 to about 186, right? I want to see break above this. And if it does, hey, that's going to gain a lot of attention here. Obviously, a lot of tight trading over the last 6 months. But that 200-day gives you some wiggle room up there to 233. So you got some room to run there. All right, whew. That has been quite a show. Yeah, it's already past 1 o'clock, Joey, I guess. But hey, I wanted to, I know we took definitely some more time than anticipated for Todd, but such valuable information that he shared with us. And, just to recap, if you don't know this already, on the training tab, if you have, any subscriber to VectorVest, if you're on the mobile app, it's in the mobile app as well. We have the VectorVest Investor Community Room. That's where we do, the daily color guard report and other various videos to show you how to utilize the VectorVest 7 system better. Now, on top of that, in the comment section, Joey did put in the successful investor course, vectorvest.com/TSIC link. You can register for it. It is free for current members. Other than that, like I said, Glenn is gone this week. He does have a video that he recorded for today. Tomorrow, I'm probably going to be doing Nvidia for the 6 p.m. video. Wednesday, Thursday, not sure yet. One of those will probably be, I think the Wednesday video might be one of his navigation series videos. And then he will be back next week as business as usual, right? But as we can tell, let's just see where the market's at before we going into the afternoon. The red light is back. Again, the confirmed call situation is down. Primary wave is down. Can't say it more than this. I know Nvidia's earnings is Wednesday, and I know there's a lot of different ways to play Nvidia's earnings. Just know for the bulls, it is dangerous to play that, right? So, there's just sentiment in the market. We saw, obviously, China's quantum developments, whatever you got to say about that. but it does put fear into the market. We're seeing that in some of these tech names here. Now, other than that, we've got inflation pressures, right? Tariffs, I know, being less bit of the news lately, but inflation is still a risk, right? We've heard comments from the Fed, an interest rate cut. I don't see that on the table anytime soon. But if inflation starts to outpace, and I've done inflation videos in the past, especially if it gets, well into the threes or, above that channel I talk about, don't ever, say that an interest rate hike is off the table. I think that's still a potential, depending on what inflation does and the tariff situation. But as far as a cut, I don't see it. So, just be careful in the market right now. I'm not going to say, crash, that kind of things, but just protect your profits. I'd be less concerned about buying stocks. Obviously I know the traders are going to buy, but if you're an investor, less worrying about buying, more, protecting your portfolio at this point. Everybody have a great afternoon, and I will see you tomorrow.